Hello and welcome to Autovista24's latest webinar, the 2022 Outlook, Electrifying Europe's New and Used Car Markets. I'm Phil Curry, I'm editor of Autovista24. And before we get into today's discussion, I just want to give you a brief overview of what Autovista24 is all about. We bring you analysis of latest topics and challenges facing the automotive industry through various different mediums, news, features, and data-driven articles. We also have a multimedia channels through podcasts and YouTube, which allow us to dig deeper into the information that you need for your everyday businesses. We bring together the expertise of Autovista Group in one place to keep you informed about everything going on in the automotive market. You can visit us at autovista24.com, and while you're there, don't forget to sign up to our daily email, which brings you everything you need to know directly to your inbox every morning. Now, as part of Autovista24, we have also launched a new report. This has been published in January and focuses on automotive trends and growth opportunities for new and used passenger cars. It's available now and the link is on screen now. Now, this report covers everything from electrification to ramifications for new and used car markets across Europe, deep dive into segment trends for some of the most popular powertrains, residual value forecasts for the key markets in Europe, and recommendations for OEMs, fleet and finance, dealers, and governments. It's a really interesting read, so make sure you check it out. And this slide deck will be available to you after this presentation. So if you haven't had a chance to take note of that URL, you will get to again shortly afterwards. Now, electrification is really taking off. We're seeing an increasing number of car makers announcing their electric-only plans. Regulations as well are really forcing the market down that route, with current Fit for 55 proposals suggesting 100% emissions reduction from 2035. There's also an increasing consumer focus on electrically chargeable vehicles, battery electric vehicles and plug-in hybrids. There are also new brands coming through to market, new launches, new concepts, all of which are embracing electrification. We saw quite a lot of this recently at CES 2022, with a number of car makers highlighting new technologies, everything from small quadricycles right up to electric pickup trucks. One of the most interesting concepts was the Mercedes-Benz EQXX, with a range of around 1,000 kilometers. It may only be a concept, but such technology, such ideas surely are on the drawing board for car makers. And you can catch up with all of our CES coverage, which covers a lot about electrification, again on autovista24.com. If you click on our video channel, you'll find our presentation there. Now, today we're going to be covering a number of topics. And of course, at the end of this, you will get an opportunity to ask your questions about them. On the right-hand side of the screen is a box where you can put in your questions throughout the webinar. Don't wait until the end. If you see something or you hear something that's of interest, put it into the box. I may even interrupt our experts while they're talking. We will do our best to respond to all unanswered questions after our Q&A session, even if we don't get time to answer them in this webinar. So again, make use of this opportunity when you can. And at the end as well, contact details of our experts will follow. Now, our agenda today is going to take us through some really interesting topics as we look forward to 2022. We'll look at the state of Europe's EV market, marketing factors and economic strength, the risks of a bubble build-up before a summary and the Q&A that I just mentioned. And I'm really delighted to be joined by some of Autovista Group's top experts today. We have Dr. Christoph Engelskirchen, who is Chief Economist at Autovista Group, Roland Eil, who is Managing Director at EV Volumes, and Sonia Niels, Principal Analyst, Launch Intelligence, Autovista24. Thank you all very much for joining me. Now, first of all, we're going to look at the state of Europe's EV market, both in the new vehicle market, I do say. Now, we're going to come to you, Roland. The market is currently seeing shares almost 20% for battery electric vehicles and plug-in hybrids, electrically chargeable vehicles as a whole. That's quite a success story. It's quite a rise, especially over the last couple of years. But how surprised are you about this trajectory? Is the market at risk of overheating? Oh, we have you on mute there, Roland, sorry.
Sorry for that.
There you go.
No, most probably not overheating. in terms of volumes, the growth in Europe was as expected. However, as the Europe auto sales stayed considerably below expectations, share came out higher, 17% for the year. December saw a new record with 25% EVs in new car sales. And in 2020, Europe was the EV growth motor with a sales increase of 138% from 2019 to 2020. In 2021, the increase stayed at 66%, while the other regions grow even much faster.
Could you put into some context for us? What's happening around us at the moment?
Well, around the world, EVs are growing at a very, very strong pace now. And this is partly explained by the low base effect, as EV sales outside Europe suffered more from the pandemic during 2020, even if they were more resilient than the total car markets. With strong incentives and policies, Europe kicked off the EV boom in 2020. And in last year, in 2021, the other regions made up for the stagnations they had seen during the 2020 pandemic. And globally, this added up to 6.75 million deliveries of EVs, 108% increase over 2020, and a 8.3% market share, which is quite a lot.
So what are some of the common drivers for the market? What's happening to bolster these high adoption rates around the world?
Well, we see some common denominators, like the portfolio expansion in EVs from almost all OEMs, with improved products, notably range, e-range, at almost unchanged prices. Another important reason is charging infrastructure built out. The higher priorities on EVs are getting in marketing and distribution, and also exports. Then we have environmental concern and health concern, in particular now, after these experiences. We have increases in awareness and in experience with EVs. They are more on the road. They are seen everywhere now. Oil prices are high. They are above pre-pandemic level now, and they are often combined with higher taxes on fossil fuels. And then we have the cost decline of renewable energy installations, like solar panels and EV ownership often go hand in hand. And as these motivators will mostly stay with us for the coming years, we are very optimistic about future EV adoption.
They said that now forecasts, sometimes they can be wildly ambitious, but in the case of EVs, forecasts have been rising and rising for 2030s, particularly, including yours. How ambitious are you compared to other forecasters, and what's the reason for that?
Well, we have been rather bullish about the EV potential since a long time, and when we started EV volumes back in 2015, we were already looking back to 5 years of steady EV sales increase and product improvements as well. Sure enough, we had to revise our forecast both up and down, but then a forecast is never one and done, and we adjust continuously. You can show this chart. Yes, this is an example for various 2030 EV forecasts for Europe, including ours. And in the early days of our company, the picture would have been very different when our forecasts were a multiple of what traditional agencies were predicting. Today, we are usually in the upper third of the forecast range.
So what can we expect for 2022, as we're discussing today, and also for long term?
Well, For this year, we are expecting 9.5 million BEV and PHEV deliveries globally, which is another increase of 42%. Not the high increase we have seen this year. This will calm down, but we still will see a considerable increase, maybe more if supply chain work. And our outlook for 2030 is that around 40% of global light vehicle sales will be BEVs and PHEVs.
Now, we wouldn't be talking about electric vehicles if we didn't mention the T word. So Tesla. Will Tesla be as dominant in 2022 and 2023 as they were last year? And what are the most exciting announcements that's going to keep the industry really sort of, surging forward with everything?
Yeah, Tesla is made the #1 position this year again, 936,000 deliveries, which is a clear #1. And what we foresee is that they will retain this position for quite a while. And in their current position, they are constrained by supply and logistics, and they could, for instance, not keep up with the rapid growth of EV sales in Europe. All Europe volumes of Tesla, which was 170,000 last year, is imported from either China or US. And Tesla is opening two factories this year, one in Berlin and one in Austin, Texas. And Tesla is increasing global capacity by approximately 1.5 million units for 2022, depending how the ramp up works out. And by this, they can keep and maybe even extend this sales lead. Midterm, new products in very large auto segments like pickup trucks in the US and compact SUVs worldwide will further solidify Tesla's position. Some exciting announcements I think can look forward to is in the next year's cost parity of EVs with ICE vehicles, or EVs outselling their ICE counterparts. Spoiler alert, BMW 4 Series and i4. Europe and USA battery plants going online in large scale, among many other things. But these three I'm looking most forward to.
Excellent, Ron. Thank you very much. We're now going to move on to our next sector, masking factors and economic strength. Now, before I come to you, Christoph, I'd like to come to you, our audience, instead. I'd like to get your opinions, your views in our survey. How concerned are you about risks of a bubble build-up on Europe's used car markets in 2022 and 2023? Very concerned? Do you think prices have risen for used cars too much? Are you mildly concerned? Some smaller down corrections maybe? Or not concerned at all? Do you think that supply constraints may keep prices stable? So we're going to run this survey now. We're going to keep this open for a minute or two. So again, just to reiterate there, how concerned are you about the risks of a bubble build-up on Europe's used car markets in 2022 and 2023? And while we keep this on screen, I'd just like to highlight that the slide deck and a video of this webinar session will be made available to you all at the end. So have no worries about that. If you missed any details, any links, if you want to see any of those charts again, you can do. You don't have to be scribbling down notes furiously. So just keep this up on screen just for a little more longer. Again, it'd be really, really good to hear your views or see your views on this subject. Okay, I think we can look at some results now. So here we are. So mildly concerned, some small downward corrections, 46%, obviously leading the way there. Very concerned and not concerned, 20%. It's quite an interesting response rate actually there. So Christoph, I'll now come to you, obviously on the back of this. The current market dynamics are not fantastic at the moment. Everything still seems to be very largely disrupted, and it's very difficult to predict as well. What are the masking factors that are affecting automotive markets at present?
Yes, this is a good question, and one that we have been struggling with, because there are so many factors at the moment that have such a high and disruptive impact on supply and demand that it's so challenging, right, to predict what's going to happen. And the ones that you can see on the screen at the moment, they are the ones that will stay with us for a little bit longer. So we have COVID-19, which, for example, not only had this disruptive effect on the supply side, so on supply chains across the world, but also on demand. So the demand for cars was rising a lot over the past 2 years, and supply couldn't keep up. We've seen that strong monetary and fiscal intervention, and the latest risk that has surfaced is inflation. But there's also this, more systematic risk now around chip shortage, which has been with us for some time. It's going to go away to some extent over the next 6 to 12 months. But when you see what suppliers are saying, they keep mentioning the automotive industry is just a very small, fraction of those asking for better and improved chips. So in the end, this will stay with us for a little bit longer, and demand for chips will just keep on rising for other devices as well, not just cars. And we have that European Green Deal, which is such a powerful piece of industrial policy, and a lot of the things that Roland just mentioned earlier are so much affected by Europe's Green Deal, rather than a superiority of the battery electric vehicle, for example, from a suitability for everyday use or from a pricing perspective. So it's very much driven by the carrot and stick approach that Europe, the EU, but also national governments are putting upon us.
Now, during the COVID-19 pandemic, we saw the new car market fluctuate wildly at some point. The used car market seemed a bit more stable. There was peaks and troughs, but not as bad. Would you consider, therefore, that the used car market was the winner in the pandemic?
Yeah, I mean, first of all, the used car market also suffered in terms of number of transactions, not as much as the new car market that was down, or still is down 25% versus pre-pandemic 2019 levels. But what people are usually saying with regard to used car markets, that they developed favorably in terms of prices because of the factors that we have just shown you on the page. But this chart in particular speaks to the COVID-19 situation and how it has propelled used car prices up. Really, the thing to bear in mind here is that supply was heavily constrained, and demand was so much higher than ever before for cars. So all this together eventually washed through into rising prices. So whenever if you were in the lucky position to have cars to sell, you could actually benefit a lot from that situation. But as I said, the number of transactions has come down considerably. Probably there are two lines that stick out a little bit on this chart. One is the UK. Prices are up almost 30%. By the way, most of this happening in 2021. And the reason here is that the market is particularly closed off. Not just because of the steering wheel setup on the right side, so you can't really import cars into that market, which could have helped the supply situation. But also Brexit hasn't helped. And yeah, so there's actually propelled prices in that market to very unhealthy levels and very painful levels. You know, if you're in need of buying a car. For Poland, we see the line underneath is also rising quite steeply, or well, actually quite steadily, but to very high levels as well. And here the reason is more the economic strength of that country, and in particular, Eastern Europe is very much focused on used car markets. They are, you know, they are buying a lot of used cars relative to new cars, and they are feeling the pain of the supply restrictions. Also, in both markets, we'll cover that a bit later, inflation rates are particularly high, and this also washes through to car prices and vice versa. The majority of markets between 10 and 15% increase of used car prices over the past 2 years, and the Nordics have been a bit softer in that increase. And yeah, so that's what we see in the market at the moment.
Now, the Omicron variant caused a bit more, you know, sort of panic over the winter periods. How strong are our economies, and can they weather the Omicron storm, the perceived disruption it may bring?
Yeah, I think what we are seeing in governments and in forecast institute all over the world, if you look to the left side, we have a pretty fast economic rebound scenario here. Yeah. When we started in 2020, people were talking about all kinds of different letters to describe the expected recovery scenario. There was a W, there was a U, there was a swoosh, you know, but most of them were pointing towards longer recovery times and trajectories. Now, what we are seeing really is a V-shaped recovery due to very strong monetary and fiscal intervention, very powerful. You know, money was almost free, but actually it was free at times. And this was done to really buffer the effects that the crisis that could have been an economic one, to buffer this off and basically secure that consumer spend was still there and consumer demand was still high in a lot of economies. So that's why forecasts have been improving, and you see on the left chart how they improved from red to blue. If you were to draw this in 2020, this chart, it would have been even more extreme how fast the forecasters had to overrule their previous forecast. Now on the right side, you see the Omicron effect. And what we've said on the slide is that Omicron is throwing a bit of a hockey stick into the recovery, but it's not derailing recovery at all. Yeah. So if you look at the dark blue lines, they are the Omicron scenario, the one that we're currently living through, and the expectation is basically by the end of next quarter we will have recovered what we have lost in the last quarter of last year and in the first quarter of this year.
And what about inflation? Is there a risk of an overheating, should we say, of economies?
Yeah, it's a good question, and one that has been raised most recently as we saw prices for several goods, in particular energy and also goods that are affected by international supply chains, rise in prices. So it is real. I mean, the price increase is very real. One caveat we have to give is that we're always comparing, and when you see these numbers, they're always comparing the month of the previous year. So if you look at 2021 December, and you compare it with December of 2020, which is around this area here, you can see how inflation was actually negative in those months, or close to zero in some of these markets. So obviously, if you are comparing now with a, let's say, more normal month, inflation is higher than it was a year ago. But that's just one side of the story. So inflation is actually a risk at the moment, but what institutes and banks are seeing and saying, and I second that very much, it is something that can be managed down quite effectively by raising interest rates. And we're seeing this happening in the UK, in the US. Europe has been underestimating a little bit the inflation. That's what Mrs. Lagarde said just recently. They haven't increased rates as of yet, but the expectation is that they might. Yeah, and we have to understand that that the interest rates are zero, close to zero, or at very small levels, and that's certainly not a situation which is is good for for normal behaviors of prices. Yeah, so a slight increase is actually going to be now helpful to keep inflation, to moderate it down. A little bit of a negative effect on stock markets, but a more sustainable scenario than the one that we had 2 years and 3 years ago.
Christoph, thank you. We'll move on now to our next section, which is looking at the risk of a bubble buildup. Sonia, I come to you. We see a depressed supply of new cars and a rise in EV sales. That's not enough to justify talks about a bubble buildup, is it?
Thanks, Phil. And yeah, you're right. Now and in the near term, it certainly is not. But things are expected to look a bit different in the coming years. And we just heard about the massive growth of the European EV market. And we also heard about all the masking factors and influences shaping our economy and our daily lives at the moment. And the question now is whether underneath all of those economic circumstances, a remarketing bubble is building up. So let's look into the three main risks we have identified and continuously look into. So the number one here is, with the rise of leasing and private contract purchases, holding periods of new cars decrease. And that in turn increases the number of young used vehicles entering the used car market. And here on that graph, you see a split between the nearly new ones, so talk of 6 to 12 months, and the up to 36 months typical off-lease cars. And we expect the volumes of those to be remarketed, young used cars, to rise by more than 50% by 2030. And yes, a bubble could very well be forming out of this.
We just had a question in, Sonia. Is this showing EV only, or is it showing all powertrains? This
is all powertrains, but we can move on to the next slide, and then we'll see more about EVs in specific. Because those increasing remarketing volumes, they hold true for all powertrains. But here we have a bit of an indication about what we think is happening for EVs. So we see remarketing volumes for EVs around 120 billion euros. And that is conservatively estimated and year on year. So annually 120 billion euros. And even very slight changes in residual values will account for large amounts of money, or remarketing risk, if you want to say so. And in this indication, 1 percentage point of residual value roughly equals 1 billion euro. And with the EV used car market still not being fully developed, infrastructure not yet on a sufficient level, in some countries yes, in others not, certainly not in all, and we have a heavily incentivized new car business, this remarketing risk is very difficult to grasp and requires close observation and risk management.
So what exactly is the issue with, say, battery electric vehicle remarketing?
Yeah, one challenge certainly is the topic of lifecycle depreciation, and that will continue to be higher than for combustion engine vehicles. And the main reason for this is the very high pace of technological advancements in BEVs. This example here shows how ranges are developing, and over the past 2 years, the average range increased by 100 kilometers, or a quarter. And that puts really some very realistic price pressure on used BEVs for the near future. until ranges are beyond, let's say, 500 kilometers, not only on the new car market, but also on the used car market. So about 3 years after we've reached that on a new car market. And range is just one example. There's also a charging technology. So a lot of talk is about the 800 volts charging technology and things like that at the moment. So this is mainly related to the speed of DC charging. And then we also have the capability of upgrading features later in the life cycle and maintaining your BEV more fresh and more up to date via features on demand or over-the-air updates. And of course, another big point, and we've touched on that before, is government incentives, and they almost exclusively apply to new car purchases. And thus, they bring down transaction prices and the starting points for residual value positioning. And this, in combination with the lack of incentives for used car buyers, puts a lot of pressure on the willingness to pay, basically, for used BEV buyers. And that's probably the main reason why the used car market for EVs develops slowlier than it does for the new car market.
So what about the internal combustion engine remarketing? Is after rising values, are we going to see them coming down?
Yeah, let's look at that slide where we have the RV development over the past 2 years split by powertrain. And this is an example for France, but it looks very similar in most of the countries. And here what you can see is that the different pace of adoption in the used car market it's different. And it shows how different BEVs fared versus the ICEs and how strong the demand for ICE vehicles is still on the used car market. And yes, we believe that there may be some downward correction in some markets when it comes to ICE. So for example, as we've seen earlier in the UK, the 30%, there will be some downward corrections. But the continued phase out of ICEs on the new car market helps to keep values on used car markets at a good level. So yes, there will be some smaller downward corrections, but a large share of those RV increases we've seen over the past 2 years will be sustained. And in our most recent report, we provide very detailed forecasts by market, by segment, and by fuel type about what we expect to happen in 2022 and 23. And that report is delivered in an online format and includes an interactive multi-country dashboard, which illustrates the forecast at a glance. And so let's give you a sneak preview into that. And as we see here in this very first dashboard, we have the forecast for C-segment diesel vehicles, which will continue to have rising RVs in all countries, but the UK. And even there, it's only a very small correction compared to the 30% increase we saw earlier. And if we go to another example from that interactive dashboard, we see that for plug-in hybrids, in that case, the picture is completely different. And there we'll have consistent downward corrections in all countries, but Italy. And that's mainly because in Italy, the starting point for residual values for plug-in hybrids is comparatively lower than it is for other countries. So this report, as you said in the beginning, was published just now. It's fresh from the press, and you can visit the site that we see on the next slide as a reminder to find out more and leave your contact details so that we can get in touch.
Indeed, thank you, Sonia, and I do recommend everybody have a look at this. It's definitely it's packed full of information. It's definitely worthwhile. Definitely a worthwhile report. Thank you to all of the panel. We'll come to the Q&A shortly, but I just want to give a quick summary of some of the points that we've discussed in this session. So the market share of EVs in Europe is almost 20% for the full year 2021. And by 2030, we can expect EV market shares of 50% and more in Europe. There's several masking factors that keep on disrupting supply and demand balance, but easing expected at least towards the second half of 2022. COVID-19 has propelled prices to new heights. There's been a run on internal combustion engine cars due to lack of supply and stable demand, but battery electric vehicle RVs underperformed relative to ICE. Lifestyle effects, low levels of used car market adoption, just some of the reasons for this. ICE RVs should stay stable in 2022 and 2023, with the exception of the UK market. Electric vehicle RVs will come under pressure in most markets, but they will not fall off a cliff. Now we have time for a few questions. We've had a few coming in already. And again, if you haven't already and you want to, there's a box on the right-hand side of your screen. Input your question now. If we don't get to you during this session, we will come to you afterwards. We'll make contact with you. Now the first question I've had in, there's a lot of talk about battery health certificates supporting the used car market. But what impact on value do you think there would be if, say, a battery was 80% health versus 90% health? Would this matter for different segments and different markets as well? Christoph, do you want to pick that one up?
Yes, absolutely, Phil. That's a good question, and one where we have been working together with Twice and also with TÜV. And there's a white paper actually that people can download, or a link to that we can also, I hope, Phil, we can also put in the chat or send afterwards to the participants. Or you can Google it. If you Google Autovista24 power of signaling, you will find it on the internet. Yeah. So the question was whether it has an impact on residual values, whether state of health is 80 or 90%. And the clear answer is yes, and we put some numbers in that white paper as well for you to have a look. There's one thing that we have to bear in mind. So if we're talking about 80%, where every other model of that same or every other particular vehicle of that same model has 90%, then there is some sort of mistreatment in place, yeah, or bad quality in place, and that has an impact. If 80% is a very normal behavior for that particular model, after, let's say, 8 years of being in the road and 120,000 kilometers or something like that, then the 80% still also has an impact, but it's a normal BEV typical depreciation curve then. Yeah. So what the battery health certificate is good at, if it's being implemented, is to show how, first of all, different qualities of, let's say, manufacturer quality of the battery has an impact and shows in a certificate, or how different treatments of the car have an impact. And the idea here, again, have a look at the white paper. It's quite detailed. Is we want to establish a win-win situation here. That if people treat their battery better, so not charging to more than 90%, not too much fast charging, then this should wash through in a much better battery quality, and that should show in remarketing results. And there's a win-win for everyone. Yeah, so we're not trying to punish anyone here, but really win-win scenario for everyone.
Indeed, and I have got that link. I'm just going to put it into the chat box there. So if anyone's interested in reading that white paper, the details are in the chat box on the right-hand side of your screen. Okay, another question in. In 2021, Tesla delivered 900,000 cars. It seems that Tesla wasn't affected by the semiconductor and microchip crisis. Is that your point of view? And do you think that Tesla will now be disrupted by other OEMs in the future as they come onto the market? Roland, do you want to pick that one up? Oh, I think you're on mute there, Roland, sorry. And go.
Yeah, I think Tesla paid more for chips in 2021 and 2020 than in the years before. There was a lack of chips on the markets. The advantage of Tesla was that they could, to oversimplify, to buy whatever chip they wanted and reprogram it, or reprogram the car around it. Tesla vehicles are more soft wired than hardwired, so they had it easier. For their future prospects, whether they can maintain the lead in the market, yes, for a considerable time. We know they are supply constrained. We know they have much more demand than they can deliver. Very long delivery times, logistic challenges, present only in 2 or 3 segments. So they not covering, for instance, their home market, the United States. In all states, they are still banned from establishing distribution centers in 20 of the US states. So there's a lot of untapped potential for Tesla in the market, considering the narrow portfolio they have today and considering the logistics and market representation which they can improve.
Thank you. We've had a couple of questions come in. Some people have had to unfortunately drop out and come back into the presentation. So just to reiterate again, the webinar slides and a video of this presentation will be available after this session has ended. So if you've missed anything, don't worry, you will have the opportunity to catch up. Another question as well. Do you see risks for new BEVs like the Volkswagen ID.3 that has a range below 500 kilometers? Should we go with that one, Sonia?
Yeah, I think it maybe links to what I said earlier about the 500 kilometers of range being available on the used car market as well. And that's a point where people stop worrying about range altogether. But that in turn doesn't really mean that there is a bigger risk for cars that don't have those 500 kilometers right now. It's you always have to compare with what is available, what you need for your use case, and of course you always have the versions with different battery packs available. So no, there's not per default a risk for all cars that don't have those 500 kilometers. But of course, once they get older and enter the used car market, they will be in a stark competition with newer models that are maybe available with higher ranges at lower costs, because those technological advancements have a very high speed at the moment. So yeah, they will be in a competition and they will have to take that competition, but that doesn't automatically mean that they are all under a huge risk. It just means that once we're over 500 kilometers, people just don't worry about that topic anymore, and other things get much more important, like the speed of charging. Yeah.
And maybe if I could just add a little bit on, I mean, what Sonia has described in terms of range progression washes through into life cycle depreciation. So I guess it would be a risk if now suddenly cars come to market which have 700, 800 of kilometers of range in that WLTP setup and cost the same, right? So that would be a huge risk, of course, but that's not something that is likely to happen anytime soon. Everything else is currently already happening, right? So every year range goes up, and as long as we are under that that sweet spot of beyond 500 real range, life cycle depreciation kicks in. But that is already baked into the forecasts and into the market. So it's not a new risk. It's a BEV life cycle depreciation fact. Yeah, and we have a lot of data, and we can observe that in a lot of models.
Excellent, thank you. We are coming to the end of our time, so we'll leave the Q&A there. But thank you for everybody who has submitted a question. As I said, we're not going to ignore them. We're going to pass them on to our panel afterwards, and we'll be in touch to give you an answer there. And again, if you have any questions, if you'll be watching this or you think of something a little later on today, the contact details of our panel are there on screen. So please do get in touch if you've got any thoughts, you want to know any more information. And again, don't forget to look at the Automotive Trend Report 2022 and register your interest. The link to our landing page is there on screen, and again, it will be available in the catch-up and the on-demand there as well, so don't worry about noting that down. And it covers a vast array of information across different segments, looking at electric, across new and used vehicles markets as well. So again, I'd like to thank our panel for joining me. It's been a very, very interesting discussion today. And don't forget as well to check out Autovista24.com for the latest news, features, and data analysis of the automotive market. And while you're there, don't forget to sign up to our daily email, where amongst other things, you'll get notifications of future webinars that we're planning to hold. Thank you all very much for joining us, and we'll see you soon.